Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for the Patreon and Discord, as well as the referral link to the MEXC trading platform. If you are looking for a place to trade futures, there is no other better place than MEXC Global. So make sure to use our referral link down there if you're interested in trading futures for crypto. Okay, so we're going to be looking at the Dixie, like always. We're going to be starting off with the Dixie, and then we'll take a look at the Dow, S&P, NASDAQ. Quick look at gold, silver, oil, and then, of course, we'll take a good look at Bitcoin. So, starting off with the dollar, dollar's doing exactly as planned. Filled out this bearish fair value gap for the most part, wick to the top, sold off from there. Came into this zone, the 104 to 102 zone, 104.88 to 102.710. And I said, as we're coming to the zone, this is the place as we grab the liquidity under these wicks here and start trading into here, watch for a retracement higher. Watch for that move higher, and that's exactly what happened. We popped down, touched that level, grabbed the liquidity that was pulling under this swing low, and pop. All right, and now we're probably going to see continuation going back to this level here. So what I'm going to see going forward is we have a small fair value gap that's formed right here. So watch for this to get filled. Okay, so right here, you're going to watch for this get filled, and then you're likely going to see this fair value gap right here also get filled. So it's another really small one. So these two zones are going to get filled. And then do not be surprised if you see something like this. So this is what I'm seeing from the dollar coming forward. Pretty much a fill here, then a breakdown again, but instead of going lower, it's probably either going to stop here or stop right here at 104, pop up, make a higher low from this low, and then continue higher, and we are likely going to trade back into the 106.56 to 108 zone and start challenging this descending trend line right here. This is the reason why I haven't gotten rid of this trend line, neither of them. I've kept them both on here on purpose because I wanted to watch as price comes back to them. I want you to see that price will have an interaction with them, and it's very important that structures that were formed, you pull their trend lines to the future. You're going to be kind of surprised at what you see. As price comes towards this level, watch for it to start buckling around this zone and failing to break past it again, and potentially either going to build a bigger descending structure that's bullish or continue its descension to this ascending trend line, where I do think ultimately it will find enough support and start creating a more powerful bottoming structure to potentially try and go higher. And what are we seeing here technically? Reason why I'm very confident we're going to go up higher. Can your eyes see it? I'm going to give you a second. All right, there it was, your second. Left shoulder, head, and if we come up here, we're starting to build out that right shoulder. And we have the neckline that's already potentially been made. Okay? Hopefully you're starting to see it. And it makes sense to happen here after this massive move, this massive trending move up for a head and shoulders to form. Now, this isn't bearish. Okay? So don't be fooled. That's not bearish. You have to change your outlook on things. When you have a head and shoulders like this, after a massive trend up, it's very powerful because, yes, it's showing you a topping structure. So, yes, you can say it's short-term to mid-term bearish. But on a macro, this is still uber bullish for the dollar because it broke this monthly macro trend line. So this trend line here is so big, it's so important that this was broken for the dollar, that we are likely going to have a retracement back all the way towards this level. Now, it doesn't mean we're going to get all the way back towards the trend line, but we are going to get back towards these lower zones down here, the 100 to 97 zones eventually. Okay, I'm not saying it's going to happen next week. We're talking a good portion of next year. It may take, it may even be in 2024. This is the monthly chart after all. Okay, and once we start getting towards these levels, start looking for long-term moves to the upside. Okay, I am not kidding when I call the 2020s to 2030 the decade of the dollar. This is the decade of the dollar, guys. Okay, you're going to see this melt up because foreign currencies are going to die. and they're going to die against the Dixie, against the dollar. So you're going to watch the dollar melt up to death. That is the plan. The charts say it, the fundamental analysis says it, the banks are saying it. You got to get that through your head. All right? You're going to see a melt up phase in all these assets, a lot of these assets, and they're dying as they melt up, for sure. So watch for this move down on the Dixie, especially if we start getting this right shoulder structure. And then once that happens, you're going to come back down. You're going to start targeting this low level again around 102-ish. You'll probably start getting a bounce from there, but the bounce will be temporary, another lower high, and then a breakdown, and that's when you start going down towards the levels I'm looking at, and you see all the confluence down here with this zone and this descending trend line. This is the monthly descending trend line right here. Okay, so this is what I'm seeing. This is what I've been eyeing since we started breaking down from this bull structure here. Okay, because this wasn't confirmed to be a head yet until I saw that this bull structure was confirmed lost. And then watching how we start trading here, I was like, okay, yeah, we're in that process, and that's why I've been eyeing to watch to see how we would bounce here. And this is exactly what you want to see, but this is going to be a neckline zone for sure. Okay, so again, no guarantees, only probabilities, but the probabilities jumped up super high today. That's why I sound so confident. It can still fail lower, it can still break down, and that's great. You're not going to hear me complain if the dollar wants to go down faster. Okay, I'm not going to complain, but I am telling you, the probabilities have jumped extremely high now for this to become a much larger macro structure, or I should say much larger structure on the macro to be bullish, short-term, mid-term bearish for the dollar. Long-term bullish, short-term, mid-term bearish on the dollar. All right, next is Dow. So next is the Dow. So Dow came into the fair value gap, fought in here for quite some time, finally sold off of it today. And I do see this to potentially come down much further. I think we're going to visit this fair value gap first, but I do think we're going to start trading right through this. We're going to grab the liquidity under this wick here, and we're probably going to trade all the way back down. Watch for a trade all the way back down to 32,000. So I think 32,000 is going to be the first major level we're going to start trading at, and we might have some wicks back into these fair value gaps. I highly doubt if we're going to stay bullish, we're going to wick back down as far low as like 29,000. Now we definitely may, but I don't think that's how low we're going to go. Again, it's what I think. Doesn't mean it's going to happen or not going to happen. I don't trade that way anyway. I'm just giving you my opinion. But if I had to put a good educated guess just off of the structures I've seen over my decade of trading here, I would say that we're probably going to start tapping the high side of this descending trend line and then start trading down it and trading into these fair value gaps and probably not getting towards the low side of this one here, the third one here. Okay, but overall, I like how the Dow looks, but it may be done for some time, potentially. But I do think for most of the beginning of 2023, it'll probably be bullish to a degree. Again, it depends on the Fed going forward. What they've talked about, the last FOMC, it came off as quite bullish, quite dovish to a degree, though not that much had changed, but they did give implications that, the insinuations that, they're definitely contemplating, changing their policies, right? Changing their stances. And that's a good sign if you want to see assets go up, especially risk on assets. So, watch for a pullback. But I do think you'll probably you look for a pullback as low as these fair value gaps here, especially towards the high side. But I do think it's going to be a bullish pullback. You're going to make a higher low, and then probably from there get the fuel to try and make that continuation move higher and eventually fill out this fair value gap, taking out the liquidity above this high swing high that's formed here. Next is S&P. S&P is interesting. I think it's in a rising structure. Now, I do think the structure will break, and I think all of them, S&P, Dow, and also the Nasdaq, are just going to be making higher lows from their low structures here. It's just going to be we're going to have to be patient. It's going to be a slow grind in this way, because they're going to be fighting. All right, they're going to be fighting, and then as this breaks down, you'll probably see it break back under 3,900, and I think that will cause a lot more panic than people expect. And that's when you're probably going to get a lot of panic selling off of the S&P because they're going to be afraid of a breakdown further, and I do think that'll probably be a trap. I've seen this before to a point. This happened a lot back in 2010 and in late 2009. When I studied those structures, you had a lot of bottoming structures that started breaking up, making new highs from their local high, and then they started breaking down. And the moment they took out one low, everyone started panicking because they started having fever dreams of 2008 all over again. So I think we're there again. So watch for a breakdown, and then watch for a higher low to form from the ultimate low. Okay, so I do see the S&P getting as low as 38 to 3,700, easy. But I would be surprised unless the Fed really hunkers down and stays hawkish, for us to break under 34, 3,500 again. It can't happen. It can't happen again. I'm going to give myself the caveat of, if the Fed is going to be super super hawkish, then this was a nice, very very small rally. But in my opinion, I think we're going to probably have more bullishness going into the end of the year. Next is NASDAQ. So NASDAQ, same thing, going to be a bullish pullback, in my opinion. Come back, test this fair value gap. Should trade lower than this low. We should see this break under 11,400 and start trading into this level here at 11,100. Now, it'll be very healthy if it can hold that. If it can hold that level. And if it doesn't come in trending that level, so essentially if we see it pretty much come down sort of like this, that will be very very healthy in this sort of structure. You're having a kind of like a rounding structure. That's what I would love to see ideally. Again, we'll see how it actually forms. It doesn't really matter what I would like to see, but that would be quite healthy. If it can hold this zone here, that'd be very impressive. Or pretty much hold these swing highs right here as support. That would also be very impressive. But I do think you're probably going to see it trade into this fair value gap, and then from there attempt to get the liquidity to continue higher towards this higher green zone. All right, next is oil. So let's take a quick look at oil. Oil continuing down as expected. Once it started losing this ascending trend line, it was very clear that we were probably going to see this break down further. Came back up, tapped this fair value gap here, and started breaking down again. And watch for it to come all the way down past 75, finally, past this low wick, and look to tap towards this descending trend line here. So that's going to be anywhere from like 71, 72, potentially, if it takes a really long time to get down there, $70. And this is from a descending structure on the monthly. So it's a bullish structure. Okay, it's a bullish structure. I'm actually fairly bullish on oil, like I am the dollar, but I do think you're going to have some long periods of selling in oil, just like the dollar, because I'm looking at like a multi-year, pretty much a decade time frame on these two. So watch for this to continue lower, and I think oil can go as low as $60 and still be bullish. Oil's potentially more bullish than the dollar. It's super bullish. It's crazy. Right. Next is gold and silver. So gold having a bullish pullback. I think this has to pull back deep. Personally, like I think ideally it will. I think this was a trap move. So once we were pulling back here, I was calling for a deeper pullback coming into these levels here. Now, it wasn't out of the question that could pull back here and then continue higher. That's not like super rare or anything. But from how powerful this impulse was from this descending trend line, it's very, very probable, very common for a deeper pullback, especially after, how we pulled back into this fair value gap. It didn't give off a bullish consolidation. It gave off a bullish retracement. But then I think we just trapped more longs, more late breakout buyers here, and we're going to pull back deeper and pretty much get back towards at least the median fair value gap right here before any major continuation of the uptrend. All right, next is silver. Same thing. I won't say the same thing, because silver was fighting this microphone structure that I had built here, and it was impressive what it did. I didn't think it pulled back enough. I mean, you can see my doodle. I thought it would pull back at least towards this fair value gap, and potentially this ascending trend line, but it actually just had a very beautiful continuation. Took out all the liquidity above this level here, above this consolidation, and almost reached these fair value gaps right here, but couldn't get there. And I think this daily candle says it all. I mean, I think you're going to see that continuation back to probably down here. I would be surprised. I would be very surprised if we can actually hold this consolidation for silver. Pretty much if we come back into this fair value gap right here, right? So this fair value gap has formed. It's a bullish fair value gap right here. Let's make that green. I expect this to get filled, and then for us to trade back down towards this fair value gap to grab the liquidity under these levels here. And then we should hold these levels, especially if the dollar is going to weaken, like I think it will as it gets to certain levels. Like I'm not seeing this happen very quickly. I think this is going to happen over, some time, some weeks. So a week to 3 weeks. So pretty much the month of December. I think the dollar early in this month, as it has, is going to get a little bit stronger. And then as we get towards the middle and getting closer to Christmas, I think it should weaken out. If the structure I'm seeing as I kind of roadmap for you in the beginning of this video plays out. So watch for that pullback, and then we may start seeing some bullish impulses as we get closer towards these this lower fair value gap. All right, next is Bitcoin. Let's take a quick look at Bitcoin, see what's going on with that, see how it's looking. So Bitcoin's interesting. Bitcoin's interesting. I want to be bullish on it, and I gotta tell you, like, this breakout is very nice. This could be a somewhat of a flaggish structure, a bull flag structure. It's not super clean, not anymore because of this daily candle. So if this daily candle closes like this, it doesn't invalidate it. It gets very, very choppy. You never want to really see that where you have this break up and then break back down. So it's like a false breakout. It's not a good look at all. It's more of a trapping look, so we could see that break down again. Now, the breakdown's not that big a deal if it were to hold these levels here. So you have this bullish fair value gap right here, and it's very, very important for Bitcoin to hold this level right here. Okay, let's make this black here. So hold that level here, and then also hold this level right here, right there. Okay, so this structure needs to hold. Okay. If this structure holds, we can, potentially hold up here, or we come back down here and hold here, make a higher low from this low wick. Then I'm very confident that we're going to at least see a move back towards 18,000, potentially start tapping towards 18,500, challenging that lower, larger fair value gap right here, the low side of this consolidation right here. So we can actually hit the the trend line right here. So right here, right, we could potentially see that being a target, but we need to give Bitcoin some time. It's very important that it holds the structure. Ideally, it holds this fair value gap, doesn't even have to fill it, and it just has that continuation up. But in the short term here, this does not look bad at all. This actually looks somewhat bullish. So, watch out if we can get that continuation. But if the dollar does get a little bit stronger, like I've been thinking it will, we may have to see a further retracement down going towards 16.3, 16.290. But the real key is that we just don't lose this low wick here. If we do, then hey, we're going to be looking for 14,000 and 12,000, that general zone, to be the next levels on deck. Okay, all right, everyone, that is it for this market recap. If you like the content, please give me a like, a subscribe, maybe a comment, maybe a share or two. Let me know what I'm doing right, let me know what I'm doing wrong. If you disagree or agree with anything I said, please let me know, whether you're in the Discord or just on YouTube on the comment section. If you want to ask me a question, do it on the Discord. It's the easiest way to get in contact with me. Just DM me or ask me on the Discord. I will never DM you first on Discord, ever. I never will do it first, but you can DM me. And if you're not in the Discord, do it. It's free. Got great traders in there, great people in there, and I do post a lot of free content on there. Even if you're not a paid member, you're going to get free content either way. And I try to do free trades as well. It's not going to be as often as someone who's paying for the services get the trades, but you'll get trades here and there, and hopefully they work out for you. Okay. All right, everyone. Remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.